What up, guys? I want to say a big thank you for joining me. So, I have decided to start a new series of videos to help folks that are immigrating to different countries. And the focus for now would be on those actually looking to or have just relocated to Canada. Thank you for joining me. I make videos about personal finances and all that. If you're interested, be sure to subscribe. And if you are interested in this sort of videos, probably you're planning to move to Canada, I'll be covering different aspects of that, how to move, getting a house, also in terms of your finances, how to manage your credit and getting a credit card, credit scores and all that. But we're going to start today because I know that's one very important thing that a lot of people looking to move to different countries, especially countries that are different from, that the financial systems are different from where they used to live. So, for example, if you used to live in, say, for example, Africa or Europe or some parts of Asia, you probably are not familiar with credit cards, right? And I just seek to shed some more light here. First of all, what's a credit card? You're probably familiar with your debit card. So you go to the bank, you open a bank account, and then they give you a card for with which you can access the money you have in your account. That money in your account is what you can access via the card. So if you have $1,000 in your account, you can only get $1,000 via the card. So in bits, maybe $20 per time or $50, $100, whatever. You determine exactly what you want to take. But credit card, on the other hand, is the bank's money. So you don't physically have this money. The bank does have it, and they're going to give it to you. So you can use it whenever you want, and at a particular time, you need to pay it back. So let's say the bank decides to give you a $1,000 credit card, just to simplify it, right? That's the limit on it. That's the maximum you can spend. So you cannot spend beyond that. It means that you have zero. It's just a scenario I'm trying to paint. And I'm using my iPad so I can show what exactly that means. So it means that you have $0. I'll just select this one. You have zero. You go to the bank, ask them for the credit card. They give you a credit card of either $500 or $1,000, right? 1,000. So whenever you need money, you want to pay for something, you actually, with that credit card, paying with this 1,000 that the bank gave you. So you really do not have to have the cash in your account. You spend this $1,000 and then later you have to pay back the bank. So it is more or less like a loan. Pardon my handwriting. It's bad in real life. It's also bad on the digital platform. So that is exactly what it is. Now, Canada is a credit-based system, which means that in order to build your credit score, which in layman's term just means your trust score, how much can we trust you? How much can the system trust you with money? I'm going to go in depth into that further in future videos, so please watch out for that. I'm going to explain how the credit card actually translates to that. So using a credit card, which just to make it easier, it's quite compulsory in Canada and in the US as well. You need to use a credit card because that is the quickest way for you to build your credit. So you use the bank's money, so it's basically like a loan. You pay it back. Now, I understand, and I've seen people just spend money because, it's the bank's money, I can just keep spending it. Yes, you keep spending it, but you have to pay it back. If you don't pay it back, you get into big problems because the longer it takes for you to pay it back, let's say you miss your deadline, you're going to have to pay interest on that, and the interest keeps increasing. I'm going to show you that in a bit. Now, as a new immigrant to Canada, how do I choose the best credit card for me? What should I do? What are the first steps? So first thing is you go to the bank, whichever bank. So here I have TD Bank open. You can also go to CIBC Bank or Scotia Bank. There are a lot of banks. So there is BMO, there is a lot more banks, but these are just for illustration purpose. And then, first of all, in a lot of cases, they want you to open an account with them, a bank account with them. So you go to the bank, you tell them you want to open a savings and checkings account, they open that for you. And then you tell them, I would like to have a credit card as well. If you're a new immigrant, There are two types of credit cards. And the first one is, let's see if I can just wipe this off. The first one of all this is the secured. So the secured credit card, secured, is you have to, so for example, they can give you a secured credit card of about $500, let's say, which means that you will deposit this $500. You will give it to the bank, cash or whatever. And then the bank will make this $500 available to you in form of credit. So they will give you a card. This is to be a card, the numbers there, that has this $500 limit on it. It is your money, but then you've given it to the bank. The bank has converted that money to some sort of to credit, right, which you can actually access, which means that you have to you can spend it, but you still need to pay it back. You need to, let's say you spend every month out of it, you spend $250 every day, $250 out of this $500. You still need to pay it back because it is some sort of deposit you left, but the bank converted it to credit of their own. So they need to be able to trust that if you have even just $500, you still pay back what you use of it. So that's the first type, right? Now the second type here is the unsecured credit card. So the unsecured one, this one is you go to the bank, and the bank, they don't need you to deposit any money. They don't deposit 500 or 1,000. They give you based on evaluations they make. As a newcomer, they most likely will give you an unsecured card if you actually qualify for that. An unsecured card of $500 or $500 or $1,000. Usually not more than that. And then after a few months, after you've been using the card and paying back the money, they can increase the limit to about $5,000. So two things, there are two possibilities. Some banks would most likely, because of course they don't have any history about you, they most likely will go with the secured one. And some others, I know, for example, TD, do not mind giving you the unsecured one, but with very, very low limits, so like $1,000 or $500 in that case. So when you go to your bank, you speak with them, they'll tell you what they can offer you. We can offer you a secured card or an unsecured card for this particular limit. If it's a secured card, there's really no reason to feel bad. I know some people will be like, oh, I don't want to have to deposit something. It's fine. It's the same, really. It's the same concept, nothing else. Is very serious about it. But you can see here on the website, for example, these are the credit cards that are offered by TD Bank. You need to be careful as a newcomer. You don't want any card with any annual fee. For example, this is $139 annual fee. This is $89 annual fee. And this one, TD Rewards Visa card, is $0. That is, seems that's basically all they have. But anyway, probably they have more options they can let you know in the bank. But this one, you get cash back as well. So when you use it, you get, I think, 1% cash back on groceries and selected items. And the good thing is, you do not pay any annual fees. You don't want that. No matter how good the incentives are. So for example, they say earn up to $500 in the first year, earn up to $1,250. As a newcomer, especially someone that is just getting introduced to the credit system, just stick with those without the annual fee. That is my suggestion. If we go to CIBC, they have quite a number as well. So there's the annual fee of $139. You get $800 in travel value. Of course, nice perks. You can see them. $139 again for this one. $499 for this. $139 for this. Then there is this CIBC Aventura Visa card. Minimum annual income is $15,000. It is 0%. Sorry, $0 per year. This one is also Aeroplan card. I do not, for example, use CIBC, but if I were to use CIBC, I would take this because I know you can earn some points from Aeroplan points, which you can use to buy tickets with Air Canada and all that. That's $0. This is also zero. So they have quite a number of $0 options. You just need to find the one that is best for you. There are some for students. You can see there. The one for students won't be given to you if you're not a student. So you need to, and they have some welcome offers. But the important thing is stick with those without the annual fee. So for example, this is Scotiabank. They have this for $120, this for $139 per year. This is $120. Again, you don't need them. This is zero, this is zero. And I know you have questions. What are these interest rates? So if should I cover that now on the next video? I'll just introduce it and then we'll continue in the next video. So the interest rate basically is, you have 1,000 or whatever. Let's stick with 1,000. The bank gives you a credit card with a limit of 1,000, and let's say between you take the card, let's say January 1st, right? Now between January 1st and certain time, it could be maybe January 23rd, right? Any amount of money you've paid, you need to return that amount of money by, let's say, February 12th. That's the next month. Now, if you return the money at the time or on or before the deadline, you are fine. You don't pay any interest at all. You only pay interest when you actually go over the deadline. So, for example, instead of your deadline was the 12th of February, and you couldn't pay for some reason, you couldn't pay all of the money or some of it. We're going to discuss, should you pay all or should you pay some later. We're going to discuss all that. But you, for the purpose of this video, you do not actually pay before that deadline. Anytime you're going to pay in the future. So after February 12th, from the 13th, there will be this interest rate. And that is, for example, for TD, on things you buy, you pay with your card. So you tap your card, whatever, you pay 19%. So if all the money you spent within that time is 100 and you don't pay it back, you pay 19% interest on that. If you take out cash from your bank, so from your credit card, and you do not pay it back within the time, that is 22.99% interest. Now, the interest is only when you do not do the things at the specified time. It's nothing to fear, really. There's not much about it that is scary, you know. But then we're going to delve right into all of these other topics regarding the credit card in the coming videos. I'm trying to make these videos as short as possible. I know it's quite a lot of things, and pardon me if I'm actually very fast, and that's because I'm trying to put a lot of information in a very short amount of time. But I think we can stop there for today. Let me know if you have questions down below. I'll be more than happy to answer them, and we can also communicate via Instagram or Twitter. My handle is @famsplink, so that is FAMSPLINX, FAMSPLINX. You can reach out to me there, and I'll be more than happy to answer your questions. Again, I am not an expert, right? I am just someone that has experienced these things, and I'm willing to share my experience with you so you do not make mistakes, right? All right. Thank you guys for joining me, and I'm going to see you again next time. Take care. Bye.